Hi, and welcome to Crypto Cash Army. I'm Captain Crypto, and this is your Harmony One update for Saturday, April 10th, 2021. Let's get into it. Hi, and welcome back. Harmony One is currently trading at about 15.3 cents and is down about 3% for the day. Trading volume for Harmony One is relatively light over the last 24 hours, with sellers slightly outpacing buyers, and with a total volume of about $140 million. Harmony One's market cap is currently sitting at about $1.44 billion. And right now, Harmony is ranked number 80 on the Nomics Top 100 list. There's not a lot of news for Harmony today because we're coming up to the weekend. However, Harmony would like to remind you that their Mainnet 4.0 release is scheduled for April 13th. The upgrade is mandatory and will take place when Epoch 530 is processed on the chain at about 12 p.m. UTC on April 13th. So, if you're running a validator node or nodes, be sure to upgrade all those nodes before Epoch 530, or you and your staking delegators won't be receiving some of those awesome Harmony One staking rewards, which we all truly love. While many crypto projects are struggling with their version 1 or perhaps version 2 of their protocols, Harmony One is already ready to release the fourth version of the mainnet. This just goes to show you that they're so far ahead of others in the smart contract space. I mean, while the other projects are still trying to figure out what to do, Harmony is already rocking and rolling and processing real business and transactions on their network. The new mainnet will feature some pretty important changes and upgrades with things like it will lower the voting power of internal nodes, which means that Harmony's controlled internal nodes will no longer have the majority of voting power for the protocol. This is a big deal. It will also increase the number of external validator slots from 640 to 800, which will likely lower the effective median stakes required for the protocol from about 6 million to about 5 million. We'll also offer some consensus and verification optimizations, as well as other minor fixes and upgrades. The reduction of voting power for internal Harmony One nodes is the big thing in this release. This means that 100% true decentralization on the Harmony One network is probably just around the corner. Also, the validator slot changes should make it a little easier for smaller, less populated staking pools to get elected and receive higher staking reward percentages, which is good. Well, I guess that's it for Harmony One news, but I'm sure there will be at least a few interesting announcements from Harmony over the coming week. So be sure to subscribe to our channel to stay up to date on the latest Harmony One updates. Now to the altcoin season index. The altcoin season index score has went down from 94, it looks like. I remember looking a couple days ago, to about 90 over the last couple days. This would seem to indicate a slight decline in altcoin performance over the last couple of days. Although it'd be really hard to tell if you look at the coin market cap site, it looks like almost everything's green, except Harmony, which is down like 3%. The slightly lower index score is probably a result of Bitcoin, which it just moved past 60,000. And let's see where they are now. Let's refresh just to be sure. Wow, 60,800. So they're closing in fast on 61,000 and that all-time high. And by the time I upload and you watch this video, it may already have broken the all-time high. So total market cap is sitting at about almost $2.1 trillion. Wow. I remember not very long ago being amazed when the market cap hit like 300, 400, 500 million. And then like I was like totally blown away when it reached a trillion, which was not very long ago. Now, 2 trillion. That's just incredible. So onward and upward. Anyway, but let's go to the Harmony One chart for some price action updates. As you can see, Harmony sitting just under 15.3 cents and is kind of moving sideways with a slight downward trend. I had drawn a descending triangle earlier, and I've got a lot of chart solid to go through, so just be patient. And it looks like Harmony has passed through that support line. If you see, I drew a support line, which Harmony was kind of adhering to for a while at about 15.5. Now it seems like it's broken through. So it does look like that Harmony is going to continue, at least in the very short term, this small correction it had after this recent run-up we had a couple of days ago. As you remember, on the 8th, Harmony finally broke out of this very long downward spiral that it was in for about 10 days. And then for a little less than 24 hours, but it was a big help. It just shot up about 45%. And now it's down about 12% in this small correction. Like I said, I drew a descending triangle, but it looks like Harmony is not going to be able to break out of it. I was hoping it was going to be able to break out above this descending support line, but it's broken on down. And it looks like it's probably going to continue on down to at least the 0.382 on our Fibonacci I've got here, and perhaps even down to the 0.236. Let me zoom in some here so you can see what I'm about to tell you. And that's not so bad. Now we do have a little more bearish news here. This yellow line here is our 10 moving average, and it looks like it's about to make a really kind of a bearish crossover our 20 moving average. So that means our 10 moving average price is actually going to be lower than our 20 moving average price, which will probably almost certainly result in a little bit anyway of downward pressure. Nevertheless, if it goes down to either one of these levels, like the 382 at about 15.1 cents, or even the 236 at 13.7 cents, either one of these moves, if it lands anywhere in here, essentially, before it starts back up, will probably, or almost most certainly, ultimately wind up being a very good thing. And I will show you why. You'll notice down here, I'm drawing this green call out, and it says 2 possible double lows, either one. Very, very good. And I'm going to show you why. And as you can see, I've drawn another red call out here that reads, uh-oh, danger real Robinson. Down double top, retracement imminent. And the double top refers to this. Now, you probably heard the expression, if you watched many crypto YouTube videos, higher highs and higher lows, which is what we want, by the way. Because this is the opposite of that, and we don't want this. We went up here, we came down, we went back up, but this high here was lower than this one. So this is what we call a double top. And double top, very bad. It's not good. When you see a double top, it almost always results in this yellow arrow going down, a red arrow. Anyway, it's going down. Now, you see here, I've got a green one. Very bullish and good sign. Double bottom with higher low. It went down, we made our first low here. And when we went up, we traced a little, we went back down, but this low was not as low as this low. So this is what they mean when they say higher low. Get it? This low is higher than this one. So this is what we really want. It's like one of the most bullish things in crypto charts, a double bottom. Then, very good, higher swing highs and higher swing lows. Here we go, high, low, higher high, swing low, swing high, higher high, low, higher high, higher low, higher high. So that's when we went on this really massive upswing in March for about a month straight when prices were just booming, going crazy, going upward. But we've got a couple of danger signals here. Let's take a look at these. Our first danger signal was this lower high here. As you can see, we went up and came back down, but then Harmony just ran out of gas and was not able to create another higher high. So this was already a very good signal that we were going to go down and continue to go down, at least for a while. Then when we made this retracement here, it finished lower than here. If this would have finished a little higher, it would have created a bullish W, but when it finished lower, it became very bearish. Then it did finally correct a little bit positively or made a slightly positive correction and went back up and made a new top, which was technically a little bit higher, and I mean just a tiny fraction higher than the previous high. So this is danger signal number 2. It's a double top, essentially an equivalent high, or almost the same, which is usually not good. So then we went down the rabbit hole, had this long 10-day retracement and corrected about 50%, which was healthy actually. Then on the 8th of February, like I said, we finally broke out a little bit and ran up about 45% in less than 24 hours. Not bad, but again, Harmony ran out of steam. We need that second bottom. Just like we had down here, we need that second bottom. And we need that second bottom to be higher than this bottom. But we do have 2 really good chances to get that higher second bottom. And like I said earlier, one of them is at the 0.382 here on the Fibonacci, about 15 cents. But I really don't think it's going to turn back around here. I think it's probably going to turn around somewhere in here. And it may go as low as the 13.769 cent support level at the 0.236, which is fine also, as long as it closes in here and doesn't go down really close to this 12.9 cents level. If it closes anywhere in the green and starts to go back up, we're going to be fine. Like I said, either one of these support levels is fine, and anywhere in between these 2 support levels is fine, as long as we have our second bottom and it's higher than this one. Then if that happens, it's rocket time. At least up to our all-time high. And how long would that take? I don't know, but it will be a fairly steep upward ascent. Now, if we start at this level, of course, it should start in a day or 2, probably by the beginning of the week. If it does retrace, goes sideways and goes back down to the 13.7 cent area or somewhere close to it, probably take an extra couple of days, who knows. But the result will be the same. Either one of them are going to go up here. And after that, I'm sure we'll probably have at least a short correction for 1, 2, 3 days. So you probably see something like this, and before heading on up. And then, like I said, our first price target is our all-time high at about 22.4 cents. And then our second price target is going to be about 33 to 36 cents, somewhere in that. But I'm sure we'll have a couple of hiccups in between. And if we're able to trade any higher than that during this next upward wave, that will probably depend mostly on trading volume and how Bitcoin behaves. But overall, I am very, very bullish on Harmony right now. And I'm quite confident that we should see a quick and sudden turnaround over the next few days. Volume will probably be kind of light this weekend, so we may just move sideways until the beginning of next week, but maybe not. Stranger things have happened. But regardless, we'll keep you up to date here on the Crypto Cash Army channel. So just be sure to subscribe and pound that little bell thingy to receive all the latest video updates. I believe that's all I've got for now. But once again, if you enjoyed this video or got something from it and want to support the channel, please subscribe and pound that like button. But until next time, this is Captain Crypto signing off. Be blessed and have a great weekend. Bye-bye.